Hey everybody, Jeff Garber, mortgage expert, and in this brief video, I want to share with you why are mortgage rates rising when inflation is coming down. We've been saying that in the history of tracking mortgage rates, that when inflation goes up, mortgage rates go up, and when inflation comes down, mortgage rates come down. But why right now are we seeing the opposite happen? Well, let me explain. I'm going to be brief, and I hope this helps. So what you're looking at here is mortgage bonds that trade in the bond market. And this is where 30-year fixed rates come from. And what we're seeing right now is a sell-off in bonds. And as bonds sell off and price goes down, rate or yield goes up. Now, if we come back here to May 10th, this was a number we were looking for, a day we were looking for when inflation numbers came out. The consumer price index, CPI, came out, and it was a good reading showing inflation came down, and we rallied. But then all of a sudden we lost it, and we've been continuing on this downtrend going into today, which is an uptick in mortgage rates. So why is that happening? Well, in order for you to understand that, I'm going to pull over this chart real quick. And this right here, what's going on has to do with the banking crisis that we're dealing with. Now, one way that banks invest money, depositors' money, is they invest in bonds, specifically treasuries and agency securities. Agencies meaning Fannie Mae and Freddie Mac's mortgage bonds. And you can see, by the way, this chart is courtesy of MBS Highway. They provide us with phenomenal information, so I want to give them credit. But this right here, you can see the percentages in 20 and 21 of them buying were significantly up. But look where we are now, February, March, April. You can see the selling of these bonds. And banks need to sell bonds right now. They need to make money. They need to be able to get money back because of depositors pulling their money over the bank crisis. So because the banks are selling these bonds, there's more selling pressure, and that's overcoming the benefits that we're getting of lower inflation right now. So that is the big reason why rates are going up. We don't think this is going to be permanent. We have to get through the banking crisis, And adding a little bit of pressure to this is also the debt ceiling negotiation. So right now the markets are weighing upon banks selling their bonds, which drives the price down, which drives rate up, and we're seeing that now, as well as all the negotiations going back and forth on the debt ceiling. So we got to get the debt ceiling resolved. That'll put a little bit more confidence back in the markets. And then we have to get through this banking crisis. We do continue to see inflation coming down. We've been tracking it. We've had 10 straight readings of inflation coming down. So we know we're heading in the right direction, and we know ultimately mortgage rates are going to come down with them. So they're taking a break right now, and that is because, in summary, of banks, regional commercial banks, selling bonds at a loss, might I add, because they need money. All right, and it's not anything to panic about. It's just what they're doing right now to get through what we need to get through. Hope this helps. Have a great day and a great week. Take care.